Welcome back to the Property Frontline. Today I'm here again with Scott Hoaxang. Hi.
Hello all. Happy Easter, by the way.
Oh, it's over.
Yeah, it's all over in the rear view mirror.
That's right. So we're here again for our Market Watch series. In this episode, we'll cover Australian property market performance to the end of March 2026. That's where we'll utilize the information from all of the main reliable data sources and give you an overview of what's happening in the market and what we actually see. And every episode, we also include a special segment called our In Focus segment. And I'm very excited for today because we are covering the coveted subject of infrastructure. So this is something that Scott and I have to do deep dives on all the time. And so we are looking forward to showing you the things that we've found and giving you our opinion on how that's going to affect the market. Alrighty, so let's get started. Episode 27 in our infrastructure overview. So as we do every month, we draw upon the data that we find from Cotality, PropTrack, and SQM Research. So Scott, could you take us through the property market performance for March for Sydney, Melbourne, Brisbane, and Adelaide?
Sure, Deborah. Thanks for that handoff. Rolling into our monthly house price growth stats, we'll hit Sydney first. Cotality has the Sydney market down 0.3%. PropTrack had it about flat, slightly up at 0.1%. And the SQM asking price data showing a bit more of a fall there, minus 1.3%. I did do just a bit of a sneak peek at the April daily index. I'll just throw in there as well, because everybody's always interested what's happening in Sydney. And the first couple of days of April were flat. So it does not look like there's a larger decline starting at the citywide level.
Yeah.
Melbourne is down 0.4%. So a bit more of a fall there. And the Cotality numbers, again, flat with PropTrack. And SQM was minus 0.1%, so about flat. Over to Brisbane, one of our stronger performers, up 1.7%. We've all been reading about Brisbane in the news, obviously. PropTrack's numbers generally trail Cotalities on some of the Brisbane, Adelaide, Perth markets, so they're up 0.6%. And SQM's was down 0.5%. Bit of an outlier there, maybe something just to watch a little bit. And down to our city of churches, Adelaide, up 1.2%, still continuing to just chug along. PropTrack 0.3%, so maybe showing a little bit of weakness. And then the SQM data is a real outlier there, down 3% on the asking price data. So again, we'll just have to keep tabs on that. Handing back over to Debra, who's going to take us through our other four cities we track: Perth, Hobart, Darwin, and the land of government, Canberra. Take it away, Debra.
Okay, thanks, Scott. Yes, so looking at Cotality data for Perth, they have Perth bouncing upwards by 2.5. I mean, that is huge. And PropTrack only 0.5. So lots of variance there. And SQM has asking prices bouncing up by 3.6%. That's a very strong number. Hobart, Cotality has Hobart going up by 1%, PropTrack flat, SQM up by 1.3%. Darwin, that I had so much concern for last month, where it, looked like it had reached a complete stop. Cotality has it up by 1.3%, prop track by 0.6, and SQM up by 2.3. Canberra has Cotality, or Cotality has Canberra increasing by 0.5, prop track by 0.3, and SQM 1.1. So very interesting changes, and we're going to dive into them in a bit more detail because the market is nuanced. So it's not only about that top line number. But before we do that, let's look at my absolute favorite chart. And so we can still see Perth really bouncing up. And which one's that one? Oh, yeah. So this is Darwin starting to come off the boil. And then Brisbane challenging, well, certainly maybe crossing over Darwin, Adelaide puddling along, and then so it's, what's that one? Hobart, Canberra, and then Sydney and Melbourne.
Bit of a fizzle from Melbourne there, yeah.
Yeah, but like we're just about to show, it's more anything over and above 2 million. Okay, over to you, Scott, to talk us through the rental market overview.
Sure. So we'll take a look at what's happening with rents for houses and for units. This has been consistent in the last couple of months. We've had rapidly rising rents in both Darwin and Hobart, our smaller markets. But we're seeing higher growth now in rents in Brisbane and Perth. And really, that's something to watch because we really were hitting affordability limits in those cities to begin with. So
Yeah,
for those markets to be taking off again means we're going to start seeing more families doubling up in houses, honestly,
yeah,
because
that's
you're
right.
just stretching the range of what a family can afford. Sydney's house rents are up 5.9%, Melbourne up 4. So
Sorry, house rents.
bit more
Sydney,
growth there as well.
Sydney 5.9
Yep.
house. Is that,
And
I
then
thought you said, oh, anyway, sorry.
yeah, so
Go.
sorry, yeah, Sydney's 5.9% in house rents. And then we've
Yeah,
got a chart for units as well. It's pretty consistent and similar to the houses. Darwin's up almost 10% just with the housing shortage up there. So that is contributing to investors going up, chasing the yields up in the Northern Territory. Perth and Brisbane units, again, rents just growing strongly, pushing the bounds of affordability, and pretty high number there for Sydney too, 5.9%, Melbourne 4.9.
mm,
So I think we're certainly seeing strong and growing rents across the large 5 capital cities. And if there are affordability limits that we believed were out there, that they seem to be being exceeded.
yeah, it's getting worse.
Yeah.
Getting worse for tenants. Um, okay, so let's talk about what's impacting the market right now and what will impact the market in coming months. Scott, can you take us through the international issues that are impacting the market?
Sure. I suspect no one on the planet is unaware of what's been happening in the Middle East.
You'd be
We
surprised.
we almost had a large U.S. Advancement into Iran that Mr. Trump seems to have pulled back at the very last minute. Still a lot of bombing going on there with Israel bombing Lebanon, but there is a ceasefire in place. So maybe that minor spark of good news that there's some chance this is going to drive to an end state. I think we're kind of all hopeful, but at the same time, I don't want to say I'm pessimistic, but I just don't think it's going to be easy. So that's affecting global oil prices everywhere. We've got oil prices up over $100 a barrel again, and you see that every day when you go fill your car up at the petrol station. Those rising fuel costs and other material costs are all now surging. So that's going to flow right into our building construction costs. And, we really are the canary in the coal mine here because I'm dealing with builders all day long. And I just have been warning clients almost daily, we're seeing builders putting up their build prices. There is some risk for people who have signed contracts. There are clauses in many build contracts that allow builders to use force majeure clauses, citing the war. These were clauses put into contracts back during the COVID phases. So even if you've signed contracts and you're getting ready to go to site, you may not be 100% out of the woods. Maintain a good buffer for anybody who's tackling a build. And impact on rents, I think we already talked about that. These price pressures are likely to just continue to push rents to continue rising.
Because we won't be delivering the completed dwellings.
That's correct. So the rising construction costs circle back into what gets built, and we're going to end up building fewer properties while costs are this high.
Yep.
A couple of points from Debra here, I believe, on the market and our favorite RBA and budget points.
Yeah. So since the conflict, erupted, my phone has been running hot, and the main question I'm asked is, will there be bargains? Is it a great time now to buy? I think that shows a maturity of what's happening in the Australian property market, that people don't immediately go, oh, I better step back. A lot of buyers are leaning in. So will there be bargains at the upper end of the market, like 2 million plus? There will be opportunities. I was looking at some, I would call them party farms, properties at your 8 million plus on the Gold Coast and a couple of other areas. So right now in this period of uncertainty, if you bought one of those, you would make millions. So if you're a seller, maybe wait for another couple of weeks. Will there be bargains at the lower end of the market though? No. So there's too many buyers, not enough supply. And so we're still going to see more price pressure on that lower end of the market. So I'm talking sub 1 million. And the even worse, if prices to build new dwellings becomes unattractive, that will turn people back to the existing property prices. So up we'll go again. Now, is it a good time to buy? There will be a real period of uncertainty. So we're at maximum uncertainty in the property market at the moment. And how long will that last? At least another 3 weeks until we get the RBA response to their changes to interest rates, for sure. They've got to put them up. Just by how much, we don't know. And then the federal budget, of course, the big rumours about changes to property tax or property legislation. And so while we don't know whether any changes will be made, we should know what the federal government's going to do by the 12th of May, and whether that's positive or negative, it will create certainty. And the market loves certainty. So things will change after then. So if you can buy in the next couple of weeks, that's your window of opportunity, and potential for a crash. So this is something that I normally get asked as well. But really there's too much power in the market for any significant changes in property prices, because, and Scott will talk about this in a little bit because he likes to quantify, but from my perspective, what we will see is, if there's downward price pressure on existing properties, owners will go, oh, I'll just wait. I'll just suck it up. No matter how long, they will just eat baked beans and wait for a better time to sell. So there'll be fewer properties for buyers to buy, and that sort of stabilizes prices. And plus, we're already dealing with extreme undersupply. So we can't really see a case for prices to drop much at all. But I'll hand over to Scott because I know he's busting to tell you
Yeah.
what he really thinks.
Yeah,
So over to you,
I just
Scott.
want to say one thing about the budget. You know, if we do get some very bad news on the property tax side, my 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 perception is that things can change with elections, and the
Yeah,
next
that's right.
one will only be 2 years away. So there's just going to be a lot of people, exactly like what Deborah has said. We're going to bunker down, see if the other side wins, runs on reversing these taxes. So it takes many, many years for large changes in things like negative gearing and capital gains to become locked in investors' heads. Uh,
Mm.
so just kind of my thought on the budget. I'm not panicking too much. And online, if you follow a lot of what I post online, I will typically end a post with "Remember Bill Shorten," and you can go
Oh, yeah.
Google him and what happened to him in
Yes.
this space. Anyway, um, we've got a chart here just showing our overall stats for the residential property market. The Australian property market has grown to $12.6 trillion. That's up 300 billion in the last month.
Yeah.
That's across 11.5 million dwellings. But the one thing I just wanted to highlight was the mortgages against these properties, 2.6 trillion. So, I mean, if you calculated our national loan to value ratio, I mean, look, I don't
Yeah.
have a calculator in front of me, but let's just say that's 30% LVR.
Yeah.
You know, it does not seem at a very high level that we are overloaded with debt. I mean, there
No.
are segments of the market that may have a little bit too much debt, but when you look at this entire country, there is a lot of property out there, a lot of equity, and not that much from a mortgage perspective.
Yeah. Okay. Next one.
Um, something I think, Deborah, you picked this up out of a recent Cotality presentation. They have looked at who's in negative equity. Negative equity means your mortgage is higher than the value of your property. This was a massive number in the US back in the GFC, like
Yeah.
literally 20-30% of people had houses that were underwater. But look at the Australian number. Less than 1% of households are in that
Yeah.
situation. So we just don't have a lot of people that are underwater on their mortgages, which means it is easier for them to continue to pay them if things get tough.
Yeah.
This is the distribution of growth across the capital cities based on the cheaper, lower affordable areas. That would be the 25%
Yeah.
percentile, the mid range, the 50%, and then that more expensive segment, the top 25%. And it really does show. I mean, Deborah and I are giving you the citywide stats for, you know, city, Melbourne, and Brisbane, but you need to dive into these stats and look at that growth across the market. And in Sydney and Melbourne, there is strong growth in those cheaper, affordable areas buried in that overall figure. The higher
Mm.
end is quite negative.
Yeah.
That's a quarterly figure. So, you know, down almost 2% there. So it really sort of stood out about how much difference there is in the markets themselves. In Brisbane, Adelaide, and Perth, there wasn't that negativity on the high end side. But again, the general trend is the affordable areas are much stronger than the higher end of the
Yeah.
city.
Yeah. Except in the ACT.
Mm.
But
Well, there
they're
you
strange.
go. Well, it must be the higher paid government officials are feeling more set in their jobs at the moment.
Yep. Okay.
Sort of interesting charts here. This just compares investor lending now in each state versus the 10-year average. And just one or two things really pop out here. You look at the Northern Territory. I mean, investor lending is almost double where it has
Yeah.
been over the past 10 years. You've just got to watch out for this sort of stuff. When you've got that many investors all plowing into a market, you know, eventually they will leave as prices rise up. And we want to see a lot of owner occupiers and first home buyers buying in those markets. Over in the right hand side, it shows first home buyers lending as a percent of the total owner occupier market. I'm just trying to remember which ones were we going to highlight here, Deborah? We had Western
W.
Australia is just a standout. First home buyers are starting to disappear. And
Yeah.
because prices have run up so quickly there, they just cannot get into the market.
And then the other, well, higher performer. Looking at the Northern Territory, so it looks like first home buyers are on the rise,
Are active there. They're higher than that 10-year average.
but comparing them to investors, investors are up.
Yeah.
Mm.
It
So
seems almost a bit of a mixed message there. You don't know. Like I said, it feels like it's very strongly investor led, and some of those first home buyers may be buying units up in Darwin as well, just getting their foot in the door so they can avoid those very high rents up in that market.
yeah, just be careful. I really don't like that market because it's just run by the data bros and it
Yeah.
makes me nervous.
Data bro.
Because all they want to do is like hype up a price, get
Yeah.
get everybody to follow them, and then they go out and then they wreck a market like they did in Townsville.
Yeah.
Anyway, blah blah blah.
Continuing
Right,
along,
last one.
this is a chart I really loved. Saw this online actually earlier this morning and was commenting with Manish at the Property Forum, where I do some moderating of his forum. It shows population growth versus dwelling completions growth. So when you go down and look at Victoria, they are completing a lot of properties. There is a
Yeah.
larger percentage of properties getting built, units and houses down in Victoria, much higher than the population is growing. From an overall society perspective, hey, that's a good thing because there's a lot of properties getting built there. But just from a purely investment mentality, scarcity perspective, it's kind of not the best outcome. We'd almost want to see it the other way. So yeah, I thought that was interesting. And then flipping the other way, obviously look at Western Australia and Queensland, massive
Mhm.
population growth and
Yeah.
their percentage share of new builds, not even close to what the population's been growing at.
Yeah.
Do you
Tricky.
want to say something about the chart on the right there, Deborah? That's total
Yeah.
things for sale.
Yeah, I do. So this is more news about supply. So this shows listings, um, listings over the last 12 months and how while we are on a similar trend. So a dip in January, bit more property on the market in February, March, and now we'll see it sort of flatten out a little bit over winter. But either way, we are still, well, at least about 35,000 below the median at any given point there. So still not enough supply, really,
No.
and general listings are low. So, if there was a mass sell-off, we'd see that go up, and we are not.
No. Well, it's probably
Anyway,
not a great time to be a real estate sales agent either, by the way, because their business is driven by volume. And
that's
if
right.
not that many
So,
people are selling, they've got obviously a lot less commission revenue coming in on their sale.
yeah, it does. It's not great for real estate agents. So that just means that we'll see the good ones survive and the bad ones should get weeded out a little
Yeah.
bit. Right. So now we're into our In Focus segment. And as I mentioned at the start, we are looking at key infrastructure projects. I can't believe how excited I am to talk about this. So what is infrastructure? Why? What are we looking at? What did we include? Because infrastructure can mean anything from major rail right through to a new Starbucks. But so what we've done is kept this at the very significant level. So we are just looking at large early mover infrastructure that will have either a positive or negative impact on an area. So that's rail, roads, airports, big utility rollouts, and hospitals. And Scott did some research over at Infrastructure Australia, and he found that the forecast for expenditure on infrastructure over the next 5 years will be 242 billion, and that is up 14% on a year ago. So look, the changes that have occurred over the last couple of weeks, might influence that. But anyway, that's where we stand right now. So infrastructure timing. Scott, I know you're passionate about this. So over to you to talk about whether infrastructure announcements are good or bad.
So we talk about infrastructure and we read those big headlines in the newspaper, but really what we want to emphasize are the different phases that happen on each infrastructure project. They start with an announcement phase, and obviously that involves funding of that project potentially by the government, announcing of tenders and so forward. They move into construction phase, where the employment ramps up and we start seeing things happen on site. Then finally they're completed, move into operational mode, and afterwards post-completion. An example of that would be the Western Sydney Airport and Aerotropolis, which we've followed through all of those phases. They're in their construction phase now, and we'll talk about that in a minute in the project summary, but getting very close to going operational. If you want to go to the next slide, Deborah, it's just sort of a couple of charts we picked up. These are more on the theory side of things. Hopefully they will help people get this in their heads, the way that property prices move. So in the first chart, you'll see a bump up in price at the announcement. And what is happening is the speculators and the investors are moving into that market. So big news.
And me.
Yeah, exactly. I mean, there can be a variety of reasons to kind of move in, but we're trying to get in as early as possible. But the risk level, if you go down on the chart on the right, is still very high. There's a lot of things that can affect the delivery of that project. Then we move into kind of pre-build phase, and that's often where the government is funding projects. There are political deals being cut. They've got to figure out where roads are going to go and whose land they're going to buy. So our risk level is dropping. So it's now still medium high. That is starting to be the point where I'm actually a bit more interested, because the big announcement's been made, but we're starting to see things happen on the ground and it's becoming more real. Then we move into construction phase. You see another price jump up there. There are a lot of people that will key in on seeing those road graders out there, like, knocking down the land. We start seeing the road posts sort of going in. We're moving to a medium risk level on the project. I mean, construction can always stop, but at the same time, most projects, once they're started, are going to get to completion. You just don't have governments that want to terminate a project after it is started, because it's a write-off for them. They may have spent $1 billion, and if that project doesn't get completed, at the next election, all you're going to hear is this government wasted $1 billion on project X or Y.
Like Victoria.
There you go. Commonwealth Games would be kind of an example. They're not infrastructure related, but in terms of waste of money. Moving up to completion phase. This is when the owner occupiers get very interested in getting in, because they've got the amenities they can use. The road's working, the hospital is operational. They all start moving in. We're at quite a low risk level. And a lot of the growth has occurred at this point. I don't know, Deborah, probably both of us would sort of say we mostly have moved on to other markets at that point. We've bought in early with those investors. in whatever your risk profile is, whether you want to take the super high risk and speculate, or whether you'd like to lower that to kind of medium risk and maybe give up a bit of the gain, but not have any potential downside from something happening on the project. Finally, the project's up and running and going. It's in its post-operational phase, low risk, but the opportunity is mostly gone.
Yeah, and I guess the message is when you hear about these infrastructure projects, and like the ones that we're going to talk about, you need to decide, number one, whether you are going to be comfortable with the higher level of risk or whether you'd rather just wait it out because, as we know, these things can be delayed.
Just a little example, let's call this expectation versus reality. Big announcements come out on a project, everybody gets all excited. Then the rubber hits the road and they have to execute. And often there are years of delays in these projects. So you get that initial spike up, but prices may actually pull back a bit because some of the speculators don't want to hang on long enough to get to the end state. And there was an example we talked about with the Western Sydney Airport, which was announced, many, many years ago. And probably some people ran out there and just bought any land that was out there in the area. What happened later on was a lot of that land was rezoned, but it wasn't for building. It was
Yeah.
zoned for environmental use. So basically, you bought all this land that you now have to maintain as a park. The slightly better off people were allowed to farm their land, but they didn't make any money either. And it was just those portions of the land that were rezoned for the building and for the Aerotropolis that made the big money.
So there's more to it than just the infrastructure announcement. You need to
Definitely.
make sure you know what you're buying and understand what the implications are.
Yes. And on hospitals as well, I've followed a lot of hospitals and I have seen big $2 billion announcements, hospitals, and nothing happens for 2 or 3 years.
Yeah.
There is a lot of property marketers all promoting new hospital, and you sort of saying, well, when is this actually going to be operational so people can use it? Oh, 6, 7, 8 years away. Well, that is a long way to hold, waiting for those higher end jobs to kind of show up. I probably would pick a different market, if I had that expectation on when it was actually going to be done.
Well, it does depend on the buy price and what you're buying, because I do buy these types of things. And so if we can get, like 3 hectares not far from where we know where the hospital is going to be,
Mm.
and there's a property on that, like a dwelling on that property, so you can get decent rent and you can afford to wait, then you're good.
Basically,
It's where,
it's a calculated bet on the rezoning, doing all your
yeah,
research and not having 100% probability that that's going to happen, but a very high percentage chance it will, and getting that value explosion that Deborah's hinting at there.
yeah. Has experienced. Yes.
Yes.
Okay. All right. So let's look at the projects. We know that we've already packed in a lot of information into this session, so we're just going to run through it really, really quickly. But what we've done is listed the top 12 infrastructure projects nationally. And then we'll talk about states later. But the number one biggest project that's going to positively influence everything it touches, really. Well, no, that's not true. Infrastructure projects do negatively impact some owners if your land's going to be acquired by the government for not a price that you would like to sell it, or even if you didn't want to sell it. But anyway, so the projects themselves, look out for completion phases of the inland rail. So this is going to make such a huge difference to to where the rail travels and also to the local areas. Plus, hopefully, it will buffer us from events that are occurring at the moment. So it's what the government is trying to do with this is have freight move more freely on rail rather than trucks. But it also hints at what's coming with rail links, passenger rail. So at the moment, it's just for freight. I won't go into why, but if we just cover off the top line, like name the projects, and then you as the buyer can go and Google these projects and find out more about them. Number two biggest impact is a project that Scott's already mentioned. So the Western Sydney Airport and the city that's going to be built around that. And so that is really changing the amenity around the Western Sydney council areas. So Penrith, Liverpool, Campbelltown. New city, Bradfield City. I can't wait to see that built. And they're almost finished with the new Sydney Metro Western Sydney Airport line or the Metro West. Anyway, whatever it's called, the Western line, going from the new airport into St Mary's. Like that is really changing St Mary's at least, plus all of the other stations. Okay, and that's scheduled to be operational when the airport is operational in November this year. Will I keep going? And you can
Sure.
just jump in.
Yeah, I'll just one thing on St. Mary's, that's the fastest growing area in Sydney in the Cotality chart this month. So there you go. It all comes full circle.
And all
And
my
as the
clients.
infrastructure is getting very close to now being operational, we'll see that final wave of owner occupiers now moving in there to take advantage of all of that. It was investors sort of speculating, buying in early a couple of years prior. They got most of the growth, but there still is that final wave of growth coming as the infrastructure goes live.
Yeah. Okay. So running through the projects, look out for Sydney Metro West. As someone who lived in the inner west, this was a very special project. I lived right near the North Burwood. They should never have called that station North Burwood. Should have always been Concord, but whatever.
Yeah.
And so in the Fin today, they showed the design for the stations. But anyway, look out for that. That's coming. Should be online in the early 2030s. The suburban rail loop for Victoria. So Scott, one of the Australia's largest transport investments.
Just an absolutely massive orbital train line that's going to be built from the southeastern part of Melbourne, circling around the city all the way out to the airport. And there's even a later stage which takes it out to the southwest, out to Werribee. So,
Yeah.
we're talking a project that won't be operational for another 10 years and may not complete till almost 2050.
Yeah.
30 to $50 billion to get that done. So they have got their hands full on that project, with many suburbs of Melbourne to be affected, but quite a long time frame involved in that as well.
Yeah, it will be good. They've also got the Northeast Link, which is a motorway link. Look out for suburbs in and around there. Then we've got the Old Cross River Rail in Queensland. Why are people talking about it as such a magnificent change? But it actually means that it unlocks future capacity for the further rail links, which are also planned for Southeast Queensland. So,
Yes.
it is pretty pivotal. Scott, do you want to mention anything about the Sunshine Coast?
Sure. We know this one quite well. So, new heavy rail link over on the Sunshine Coast. It's going to go from Birwa into Ora, Stockland's big city there, and to Caloundra. That's going to be up and operational by the 2032 Olympics. But there was a second piece of that announced that I actually found very interesting. They're now calling it the Wave as opposed to the direct rail line. But they're going to have high-speed direct busways that run all the way up to the new hospital at Britannia, then all the way up to Maroochydore, where the CBD's at, and really was not expected, ending up at the Sunshine Coast Airport. So they're going to have the ability for someone to move from Sunshine Coast Airport to the Brisbane Airport purely on fast buses and train. And for somebody who's done that drive once, because I was on the Sunshine Coast trying to get home and my flight got canceled, I can tell you I would love to have gotten on that bus and
Mm.
taken me all the way to the other airport. So
Yeah.
it's a real kind of game changer for the Sunshine Coast.
Yeah, and because it's growing so fast. Anyway, right. The other major piece of infrastructure is something that we've also talked about for a long time, the Coomera Connector, which is really like currently there's only one real road between Brisbane and the Gold Coast. And now, once this is finished, the Coomera Connector will be a second one. So that should um, alleviate a little bit of traffic jams every single day on that M1.
At least the local Gold Coast people will maybe be able to stay on the connector and not all have to jam onto that Brisbane motorway. And
Yeah,
how many lanes is it now up there, Deborah? It's
5.
five on each side, 10,
Yeah,
10 across in the morning, and just absolute bumper to bumper.
yeah, bumper to bumper, particularly when you get to the holiday parks, and you're like,
Yes.
Anyway, let's keep it moving. In Perth, Metronet. So yeah, this is a project that's almost complete, but has been amazing. Shout out to the WA state government for getting themselves organised so quickly and efficiently. Is there
Yep.
anything else you want to say about that?
There's a couple of new stations open at Midland and out in Ellenbrook, where we've spent some time looking. It really just has been an amazing game-changing environment out for Perth, and so many areas have now connected into that city and
Yeah,
allowed so many new housing areas to open up,
yeah,
especially on the north side in those beachside suburbs that I know quite well.
yeah. And a little bit out west, like Armidale and all of those
Yes.
places. Really done some great work there. Right. Number 11 that makes our list is generally all of the infrastructure projects that are planned for Queensland. So from like the border all the way up, most of the way up the coast of Queensland. So the good thing about what the government has done is they are completing projects that will enhance each of the local areas. And the 12th one that we've added, which has become much more important and will get many more eyeballs now because of the Middle East conflict, is the EV network. So that we're not doing too bad. We've got quite a few outlets, but really the government's just got to bite the bullet, probably in conjunction with private enterprise, and really beef up that network. And the special mention, dear to my heart. So for years, people used to joke that the Western Sydney Airport would never be built, and now it's almost operational. So now the sarcasm goes to the fast rail network. But as we alluded to in a couple of other episodes of Market Watch, this is definitely moving. Like they've got an office in Newcastle, and they've got a website, and which I look at. Anyway, so what's happening? So the first phase is still just in the planning phase. Anthony Albanese announced funding for the project feasibilities to be done. I think he did that in like February or anyway, recently. So this is where it's planned for the first phase to travel. So probably from the Western Sydney Airport right into Sydney, then into Central Station. Like if it's fast rail, like what will that be, like 5 minutes? Fast, who knows? I think that's a bit too short, but whatever. And then from Central Station to Central Coast, very good decision there, into Lake Macquarie. Like that is just going to explode all of those little coastal suburbs that are beautiful. I lived up there for a little while. So there's quite a few lovely suburbs that will hopefully be positively impacted by fast rail, and then on to Newcastle. So it will positively impact all of like places even like Morisset, where they'll all get a nice bump and Maitland. So Maitland, a little bit inland.
Yeah.
Uh, and
Down,
then,
just one note on the Central Coast, down around kind of Warnervale and Dora Creek and some of those areas. I'm
yeah,
already seeing a lot of purchasing going on there. And that has to be driven by some of these announcements. That's that very early phase of speculators that,
that's right.
is buying in this early. Um,
Well, Warner's Bay is just beautiful anyway. So, yeah, it's always been a popular spot. It's where all the solicitors used to have their weekenders.
yeah.
But anyway, right. Okay. And so where are we ultimately going with Fast Trail? So while we're just focusing on this little piece to start off with, the big plan, like they've already mapped it out, is these locations. So you go to the High Speed Rail Authority, HSRA. .gov.au, I think it is, and you'll be able to get more information on all these little lovely locations. And then this was also on the website. What they've actually done is circled new urban areas, and like I didn't have to look it up, but this place here, so new urban area in Gundaroo and Gunning, Southern Highlands, of course,
Yeah.
and Campbelltown. So, lots of urban development there. So yeah, that's sort of like I would say your 15-year horizon, but get ready now because honestly, that time goes very quick. Right. And now on to the projects state by state. But we'll just flash these up and point out some of my favourites. So, we've talked quite a bit about Queensland. One of my favourites that I'm looking forward to completion is the Coffs Harbour bypass. So anyone who's driven from Brisbane to Sydney will know, like I love Coffs Harbour, but if I want to get from Brisbane to Sydney, I just want to go on a nice road and be very quick. Um, a big one that's going to impact Rockhampton is the Rockhampton Ring Road. Capital Territory, quite a few good ones there. Victoria, we've talked about in quite a bit of detail, and I'm expecting people will be like half asleep now if they've made it all the way through to here.
Yes.
And then other projects for Tasmania, South Australia, WA, and Northern Territory. Well, the ones that Scott and I will be interested in are really Western Australia. And we've already covered off those, but take note of them. Just use the name and Google if you want some more details on it. And then what we've done here also is listed the hospitals from largest project through to the more budget friendly of 200 million. But you can see here where there's announcements of brand new hospitals or extensions of the existing hospitals. This is an indicator that the government has already done their planning and they know that the population really requires more support, and that means that the population is growing, which means I'm interested because I want to buy where the population goes. Anything you want to mention about this, Scott?
Just the jobs impact in the areas as well.
Yeah.
Obviously, high paid doctors, nurses, and a variety of other people. Sometimes they're teaching hospitals.
Yeah.
One of the big
And the
things about
support
the Sunshine
industries.
Coast
Yeah.
one was it was linked into the university, and there was a whole separate educational aspect linked into that as well. So dig into
Yeah.
these announcements, see what's being built, look at the number of beds, the timing when it's going to be done.
Yeah.
And most are going to be quite good markets. You can see Tamworth down there. That was actually completed a few years ago, but there still are some upgrades being done down in that
Yeah.
market, just making it a much nicer city to move to for families, knowing that you've got good health care.
Yeah. And the other one that I know you've mentioned a few times is that Toowoomba one.
Yeah, the Toowoomba one will be massive. I think we've also mentioned maybe Bundaberg is one that's kind of coming. That's well down the list, but That's
Oh,
going to
that was
be
a
an
recent. Yeah, that was a recent. Is that on here?
yeah. I, you got
Um,
Bundy
anyway.
down at
Oh,
not.
yeah, there it is.
Yeah.
Yeah, expansion. Yeah. Okay, yeah, but yeah, pay attention because that, yeah, it's not like it's a very good point about jobs because it's not only the actual hospital, but then all of the specialists and all of the support industries that go with all of that. But yeah, so I mean, there's all this doom and gloom, but like uh, we always advance. So
There are always
keep
like opportunities out there.
but lots of opportunity, really. New cities springing up from, lots of places. But anyway, so finally we get to the end. As always, our main warning for you is to watch out for misleading data, use trusted sources, and usually it's just the main prominent sources that you can use, like the portals or the Cotality, SQM. Always conduct the financial pros and cons of every purchase you make. Use criteria that's tailored to your requirements. So if you're not comfortable buying acreage, don't buy it. What's right for someone else might not be right for you. And there's lots of ways to be successful in property, and the main ingredient is you. So get something that matches your strategy.
Yes.
If you would like some help or more detail on what we've discussed, you can find Scott at his Facebook page, Scott Property Coach. And you can get more information from us, me, at the Property Frontline. There'll be more details. Our contact details will be in the description box. But if you're looking for an end-to-end service where we help identify the best strategy for you, best location, best property, and then go and buy it. That's Buy Like a Genius. There's many people that I have turned into millionaires. I was actually just doing my case studies recently. So yeah, it's been a good run. Right. So next time for Market Watch, we are planning our insurance episode. So that will be what are the key changes for 2026 in that area. And so impacts of things like council zonings and climate change. And yes, we will be investigating the propensity for a tidal wave to wipe out the Gold Coast. That's just one of the things I've been asked to do.
Okay.
If you want any extra information. And other than that, we'll see you again in a couple of weeks. Saying goodbye.
Goodbye, everyone.